back for another video. It's your boy Nature, aka Nature. Alright, so in this video game, we're going to be talking about different types of Forex orders. So what would you like? Would you like pips with that? So we already kind of ran over pips, so that's okay already. So that's not this type of order. An order is an offered since using your broker trading platform to open or close a transaction if instructed specified by you are satisfied. Okay, so it's a open or closed transaction instructed specified by you and that are satisfied. Okay, so basically the term order refers to how you will enter and exit a trade. Okay, so that's what the order refers to, how you enter and exit a trade, and all different type of orders that we're going to go over. So here we'll discuss the different type of orders that can be placed in the Forex market. Okay, so may I take your order? So be sure that you know which type of orders you are comfortable with. Okay, and that's your broker accepts. Okay, different brokers accept different type of Forex orders. So order types, there are some basic order types that all brokers provide and some others that sound weird. Orders fall into two buckets: market order and pending order. So the market order is an order that instantly executes against a price that the broker has provided. So the market orders are the ones that you can instantly just go into the market and press the order for buy or sell. Those are instant. Okay, they are instantly executed. Okay, and it's against the price that the broker has provided. Okay, against the ask and bid price that the broker has provided. Okay, that's how the market orders work. As far as the pending orders are orders that can be executed at a later time at a price that you specify. Okay, so basically that price that you specify at, that's where the pending orders can be. You know, they are orders that you execute, and you set a pending order at those later times that price will eventually go to. Okay, here's a quick map of different type of orders within each bucket. Okay, so the market orders are the ones where you can just buy or sell. You know, as soon as you go into the market, as soon as you go into MetaTrader 4, you can just buy and sell. Those are the those are the prices that the broker had provided. Okay, say you don't want to get in at the prices that the broker has provided. That's why we have pending orders. Okay, pending orders allow you to get in on a later time a price that is more specific to you. Okay, and what you want. Okay, so you don't have to get in right off, at the broker prices. You can put a pending order in on a buy limit or a buy stop or a sell limit or a sell stop. Okay, so the market order is an order to buy or sell at the best available price. Okay, so with a market order, you can buy or sell at the best available price of the broker, wherever the broker gives you. Okay, for this example, the bid price would be Euro USD. Okay, that's the bid price. Would be 1.2140, and the ask price would be 1.2142. Okay, remember the bid price is the base currency Euro, and USD would be the ask price. Okay, which will be 1.12142. Okay, so the difference between this, if you wanted to buy Euro USD at the market, then you would sold at the price of 1.2142. Okay, because remember, if you wanted to buy, the buy would be the ask price. Okay, so the ask price is the buy. I'll show you an example of that again, so you'll know what I'm talking about. Alright, so the bid price is the price in which you can sell the base currency, and the ask price is which you can buy the base currency. Okay, so remember that the bid price is the base currency in which you can sell, and the ask price is the current currency, the counter currency in which you can buy. Okay, I'm just showing you that again so you won't be confused about what I'm saying. Alright, so let's go back to this example. The bid price for Euro USD is currently at 1.2140, and the ask price currently for Euro USD is at 1.2142. Okay, so if you wanted to buy Euro USD at the market, then you would sold the price, you would sell the price, you would sold the price or buy the price at 1.2142, because that's the ask price, and the ask price is what you buy at, and we're buying Euro USD. So we're going to buy the ask price, which was, in this example, 1.2142. That's how it says if you wanted to buy Euro USD at the market in Forex and MetaTrader 4, then you would sold, or you would buy the market price at 1.2142, which is the ask price. Okay, the bid price is if you wanted to sell. Okay, the ask price is if you wanted to buy. So you would click on a buy in your trading platform, in your MetaTrader 4 platform. Okay, your trading platform. I use MetaTrader 4. Everybody uses MetaTrader 4. So you would click and buy on the trading platform, which is MetaTrader 4, and you would instantly execute a buy at the order, of the broker, if you wanted to, at the broker price, which was 1.2142, if you wanted to buy on the ask price that the broker has provided. Okay, so hopefully you understand that. So you will click a buy on the trading platform, where instantly you execute a buy order, hopefully at the exact price. Sometimes it's not at the exact price because the market is always fluctuating and constantly moving. If you ever shopped at Amazon.com, it's kind of like using their one-click order. Okay, you like the current price, you click once and it's yours. The same thing how it goes in Forex in the MetaTrader 4 app. Okay, the only difference is that you're buying and selling one currency against another currency. Okay, instead of buying Justin Bieber CDs. Okay, so you're buying and selling one currency against another currency. Okay, that's what you're doing. Okay, once you click it, it's yours. It's yours. Once you click it once, it's yours. Okay, so please keep that in mind. Depending on the market conditions, there may be differences between the price you selected and the final price that is executed or filled on your trading platform, because the market is constantly moving, constantly fluctuating. So you might have wanted to buy at this at the ask price of 1.2142, but they brought you in on an ask price of 1.2143, depending on the market and how fast the market is moving. Depending on the currency that you're trading, different currencies move faster than other currencies. Okay, so depending on those two factors and the market conditions, there may be a difference between the price you selected and the final price that is executed or filled on your trading platform. So when you place a market order, you do not have any control over what price your market order will actually be filled at. So that's what a market order. Okay, a market order is when you just go into the MetaTrader 4 app and you buy or sell at the ask and bid price of the current broker, that the price that the current broker has provided for you. Okay, you have no control over that. Okay, those are the ask and bid prices that the market and that the brokers have provided for you. Okay, so you have to get in at their ask and bid prices. Okay, there's no way around that unless you put a limit order in. Okay, and we'll explain that right now. But that was as far as market order. That's how the market order works. Okay, when you place a market order, you do not have any control over what price your market order will actually be filled at. Okay, so a limit order is an order placed to either buy below the market or sell above the market at a certain price. Okay, and we'll explain that right now. So these are limit orders. There are two types of limit orders. Okay, there's an order to buy or sell. Okay, once the market reaches the limit price. Okay, so you can place a buy limit order to buy at the below or specific price, or you can place a sell limit order to sell at a specific price or better. Okay, so we'll explain that again. So remember, on buy, you're going to buy below. If you wanted to buy, you buy at the below. You buy near the support. You buy at the bottom. Okay, and price rises to the top, and then you get all the profit. If you wanted to sell, you sell at the top. Okay, so and then price drops down, and then you get all the profit that way. Okay, so this is how a buy limit order is placed below the specific price, and the sell limit order is placed above a specific price or better. So once the market reaches the limit price, once the market reaches your limit price for the buy or sell limit, okay, this is like a pending limit, a pending order, where you can kind of just put the order in, and once it reaches that limit price, it reaches that, that price. Once it reaches your order, it will trigger your order, and it will execute an order in at that limit price, okay, whether it's a buy limit or a sell limit, okay, or better. So this is an example of a buy limit and a sell limit, okay. So an order placed below price, then for the buy limit, you will place an order below price, okay, and then price will then, because you buy at the low and you sell at the top, so you will place for a buy limit, you will place a order below price, and then price then will go down, and then it will go back up once it hits your buy limit. Same thing for a sell limit. If you wanted to place a sell limit in, instead of just going in and just placing a buy or a sell order, you can place a buy or a sell limit order, where for this to be possible though, the sell limit order is the same thing. You will place above the price, and then price then goes to your price and then goes down. Okay, so for this to be valid, for this to happen, you have to put the buy limit below the current price, and you have to put the sell limit above the current price. Okay, because price will always pull back. Price just doesn't go straight up. Okay, it always pulls back. It always goes up and down, pulls back, up and down. Same thing. Price just doesn't go down, straight down. It goes back up. It pulls back up, and then continues to go straight down. Okay, so that's how that works. And this image above, the blue dot is the current price. Okay, so the blue dot that you see is the current price. Okay, so notice how the green line is below the current price. Okay, notice how for a buy limit and a sell limit order to be, validated, you have to put price below the current price. Okay, if that makes sense, you have to, for a buy or sell limit order. So notice how the green line is below the current price. If you place a buy limit order here, in order for it to be triggered, the price will have to fall down here first. Okay, price will have to fall, hit your buy limit for that buy limit or sell limit to be triggered. Okay, so as you can see, a limit order can be executed in your favor. Okay, price becomes more favorable to you. Okay, because say you don't want to just look at the market 24/7, just be staring at the market 24/7. I mean, if you're a new trader, I used to do that too, but eventually you're going to have a life. You want to do things. You don't want to just look at the market 24/7. So you place buy limits and sell limits. So whenever price does go down, price, the blue line is what price is currently at. So whenever the price does go up or go down, it'll hit your trigger. You don't have to be watching your phone or be on the MetaTrader 4 app all the time now. Okay, so the limit orders can be executed in your favor. Okay, price becomes more favorable to you too, because this is the current price. Price will go down, hit your buy limit order, and then go back up. So you're getting all that profit once it hits your buy limit or your sell limit order, and it goes back in that direction. So so for this buy limit order or sell limit order to be effective, price will first have to hit your order. And then trigger the order, and then price will have to fall down here first. So for the buy limit, it will have to fall all the way to the green line first, before for your entry to be triggered, for price to be triggered. Okay. So notice how the red line is above the current price. So same thing with the sell limit order. The red line is above the current price. Okay. For this to be effective, if you place a sell limit order here, in order for it to be triggered, the price would have to rise up here first. It will have to rise up to your sell limit order first, okay? And it will have to rise down to your buy limit order first. It will trigger it, get you in a trade, and then you're in profit, okay? So that's how that goes. So for this example right here, Euro USD is currently trading at 1.2050. You want to go short, okay? So you want to go short if the price reaches reaches your sell limit order. You want to go short. You want to go short, right? And price is currently at 1.2050. Okay, you want to sell that though, but you know price is going to always pull back. You know price is going to pull back. So instead of just waiting and you know being on your phone, while you can, if you want to, you can put a sell. You could put a sell limit order in at 1.2070. Okay, you can put a sell limit order, and when price reaches 1.2070, currently price is at 1.2050. So price will pull back before just going straight down. It's going to pull back to 1.2070. Okay, so you will put your sell limit there, your sell limit order there. Okay, current price is at right now with the blue dot is at 1.250. Okay, and the sell limit is 1.2070. Okay, that's the sell limit for this example. And you know, once it hits, you know, your sell limit, which is in this example 1.2070, it hits your price reaches 1.2070. It hits your trigger, and now you're in the trade. Okay, you can either sit in front of your monitor and wait for it to hit 1.2070, or you can place or at which point then you can click a sell market order. At that point, you can just go into the market and just click sell market order. Okay, at that price, or you can set a sell limit order at 1.2070. Then you could walk away from your computer. You can intend to do whatever you was doing, and when price does go up and does hit 1.2070, then your trading platform will automatically execute a sell order at that price. You know, at that price, available price. Okay, so that's how sell limits and buy limits are very useful. Okay, where you don't have to be on your computer or just, you know, on your phone 24/7, you know, looking at price. So you can use these type of entry orders, okay, when you believe price will reverse upon hitting, you know, when you believe price will pull back. You know, price will always pull back before just going straight back down. So you can use these different type of entry orders, you know, if you believe that price will reverse upon hitting the price you know, specified. So a limit order, you know, is to buy at a price below the current market price. Okay, will be executed at a price equal to or less than the speculative price. This specified price that you want. And the sell limit order is the same thing. So sell limit orders to sell at a price above the current market price, which will be executed at the price equal to or more than the specified price. The price is always moving, constantly moving up and down, constantly, you know, fluctuating. So it'll either hit your price exactly, or it'll hit your price, you know, it'll hit around your price. Okay, so you know, this is how a sell limit order is. Okay, buy limit order is below, you know, and the sell limit order is below price. Okay, so that's for the sell limit order and a buy limit order. We already went over the market order and the sell, and as far as the buy and sell limit order is concerned. So the next order would be to stop entry order. Okay, the stop entry order. Okay, the stop order stops an order from executing until price reaches that stop price. So you will use a stop order when you want to buy only after price rises to the stop price, or sell only after price falls to the stop price. Okay, so a stop entry order is an order placed above the market. It's not like the buy and the sell limit order. Okay, the stop limit order is a little different. Okay, it's instead of being below like the sell and the buy limit order, it's above. Okay, it's above the above price. Okay, so you will use a stop order when you want to buy only after price rises to your stop price, or sell price only after price falls to your stop price. Okay, so the stop entry order is an order that placed to buy above the market or sell below the market at a current price. You place a buy stop order to buy at a price above the market price, and once it triggers your market price or touches it, then your buy stop price will begin, and you place a sell stop order to sell when at a expected price, and once it reaches your price, then your sell stop price will begin. So this is a buy stop, this is a sell stop. Okay, so there's all different types of uh, all different type of stops that you can use, all different type of orders that you can use in the market. Okay, this one right here is the buy stop and the sell stop. Okay, so the buy stop and the sell stop. So you will place, for the buy stop order, you will place a price above the market price, and once it hits your market price, it'll trigger the market price, and and then you'll be in a trade. Same thing with the sell order. You will place it below, below that market price, or above that market price. I'm sorry, above that market price for the sell too. And once it hits that price, then you will be in that trade. So for the order placed above price keeps going up. Current price is the blue line, and your buy stop or your sell stop is the line. Okay, the green and the red line. Okay, so in this image above, the blue dot is the current price. Okay, so notice how the green line is above the current price. If you place a buy stop order here, in order for it to be triggered, the current price will have to continue to rise. Okay, like in this example, it's different than the buy limit and the sell limit. Okay, I'm going to show y'all that one more time. This is the buy limit and the sell limit. See how it's different? That's placed below. For the buy stop though, and the sell stop is placed above. Okay, so in order for this to be triggered, it will have to hit your buy stop or your sell stop that's placed above. Okay, it will have to continue rising in that direction for that to be triggered. As far as the sell stop, the far as though the buy limit and the sell limit, it will have to go below your buy limit or sell limit in order to be triggered. But with this, it'll have to rise to your stop or your stop or your sell stop, your buy stop or your sell stop to be triggered. Okay, so that's the only difference. Okay, with that, so notice how the green line is above the current price. If you place a buy stop order here, in order for it to be triggered, the current price will have to continue to rise to that line, to the green line. Okay, same thing for the sell. Notice how the red line is below the current price. This is the current price, the blue line, the blue dot, and the sell stop is below that. Okay, in order for this to be triggered, the current price will have to continue to fall. Okay, so as you can see, the stop orders can be executed when price becomes, less favorable to you. Okay, so that's just an example for GPUSD. It's currently trading at 1.550 and it's heading upwards. You believe that price will continue in this direction if it hits 1.5060. Okay, you can either do two things though. Okay, say you put that buy or sell stop limit order in. While we put a buy stop order in for this example, GPUSD is currently at 1.5050 and it's heading upwards. And you believe that price will continue heading in that direction if it hits 1.5060. So this what you can do if you decide if you wanted to trade that. Okay, you can sit in front of your computer or in front of your phone and wait until price hits your market and hits 1.5060, or you can set a stop entry order, a buy stop or a sell stop. For this example, a buy stop at the order of 1.5060, and once price hits 1.5060, current price is at 1.5050. So once price, if you put a sell stop order in at 1.5060, once it hits that price, then you'll get in the trade. Okay, so that's basically how a buy stop and a sell stop works. Or you can sit in front of your computer and just wait for price to hit 1.5060 before you get in the trade. Okay, so that's basically what that is. You have your stop loss order. Okay, stop loss order is an order that closes out if the market price reaches a specific price, okay, which may represent as a loss or a profit, okay. Stop loss order is a type of order that links to a trade for the purpose of preventing additional losses if price goes against you, okay, or to stop you out for profit, okay. If you go in a long position, it's a sell stop order, and if you go in a short position, it's a buy stop order, okay, because if you're in a long position, say that price goes in the opposite way, the sell stop order will stop you out. And say you're in a short position, price goes in the opposite way, the buy stop order will stop you out. Okay, so remember this type of order, as far as the stop loss orders. These are the different type of orders that you can use in Forex. Okay, so stop orders remain effective until the position is liquidated or cancels the stop loss order. For example, you went long and you buy Euro USD at 1.2230. To limit your maximum loss, you set a stop loss order at 1.2200. Okay, even though it's a 30 pip loss, because it was at 1.2230 and it went all the way down to 1.2200. It's a 30 pip loss. At least instead of taking a 100 pip loss or a 200 pip loss, you get out on a stop loss. It was a bad trade, but you still only lose 30 pips instead of losing 100 pips, 200 pips, 50 pips. Okay, so this means where you were dead wrong in your trade, and Euro USD dropped down to, instead of it dropped down all the way to 1.2000. You thought you had put a buy order in at 1.2230, but you traded wrong. It was a bad trade, and price dropped all the way down from 1.2230 all the way down to 1.2200. Instead of moving up in your buy order, instead of buy moves up, sell moves down. So instead of moving up in your favor, it went against you, and it went against you in your trading platform, which automatically, if you had a sell order in, it would have closed your position, and you would have just took a loss for 30 pips. Okay, but this is why risk management is so important. Your lot size is very, very important. You have to have money to make money in Forex. So this is why it's important that you didn't manage, you didn't you didn't maximize, or you didn't set your pip size too high. Okay, your position size too high. Okay, maybe you trade at a 10 position size, 10 cents or 20 cents. Okay, don't try to trade at 50 cents to 60 cents and you only got $200 in your account. You're going to lose that money. You're going to lose, first of all, you're going to lose 30 pip loss. On top of that, losing a 30 pip loss, you just betted 50 to 60 cent per pip. What are you doing? That's a bad. Now you just lost all that money from 30 pips. So 30 pips can mean a lot depending on your position size. So this is why it's important to manage your account, know how much money you are willing to risk. Don't risk all your money in your account. Trust me, because I've been through this. I've been trading for 2 years in the market. So trust me, I already know how this goes. Don't risk all your whole account and blow your whole account. You don't want to do that. I've been there, done that already. So instead of doing that, you just pitch your stop loss extremely. You wanna not oversize your position, and you want to push your stop loss so you won't lose 100 pips. Okay, 200 pips. Put the stop loss in. It's better to take a 30 pip loss than 100 or 200 or 300 pip loss. Okay, and then you wind up blowing your whole account because you thought price was going to rise back up and price was heading back down for the whole day. Okay, so stop losses are extremely useful if you don't want to sit in front of your computer and you don't want to worry about losing all your money. Okay, put a stop loss in. So these are the different type of orders that you can use. You can simply set a stop loss order on any open position so you won't miss out or lose as much money as in the market. Okay, so this is basically what it is. We have the trailing stop loss. trailing stop loss order, which also attaches to an O position, which automatically moves once profit becomes equal or higher than the level you um, specify. So a trailing stop loss order attaches to a trade, okay, that when price is moving and is fluctuating. Okay, so let's say that you decide to short at USD JPY at 90.80 with a trailing stop loss of 20 pips. So this means that originally your stop loss is at 9.00. If the price goes down and hits 90.60, your trailing stop loss would be a break even, okay? Would move down to 980 if it went to 960. Okay, because you have a trailing stop loss of 20 pips. Okay, so with 60 plus 20, that's 80. Okay, you have a trailing stop loss of 20 pips. Okay, so this is how trailing stop losses used. You can use trailing stop losses too. Okay, so this means that originally your stop loss is at 9.100, and you short it at 980 with a trailing stop loss of 20 pips. Price goes down and hit 960. But you have a 20 pip stop loss in there, so it's really 980. Okay, you break even. So just remember that you can use all these different type of orders. That your stop will stay at those new price levels and will not widen if the market goes against you. So going back to this example, for trailing stop of 20 pips, the USD JPY, it hits 940, then your stop will move to 960. Okay, because you have 20 pips in. Okay, so it locked in 20 pip profit. Okay, so a trailing stop loss is, can lock in pips for you. It will just trail, whatever. Say you put a trailing stop pip at 20 pips, it will lock in once it hits the 960. Okay, from 940 to 960, that's 20 pip profit. Okay, so that's how trailing stop losses work. Your trade will remain open as long as price does not move against you. Okay, by 20 pips. Okay, once the market price hits your trailing stop price, a market order, will be closed at the position of the best available price that the broker has given you, and will be sent, and your position will be closed. Okay, so this is basically what it is as far as buy, sell orders, trailing stop orders, limit orders, and sell stop orders. So new traders often get confused with limit orders with stop orders because they both specify a price, but both types of orders allow traders to tell their broker at which price they're willing to trade in the future. So these are very important to know. I just wanted y'all to know about stop orders and sell orders and buy limit orders and sell limit orders and market price orders, and as far as buying and selling, market price orders when you can just go into your MetaTrader 4 app and you can just buy and sell. Okay, then you have the different type of pending orders where you can, even got trailing stop losses or orders where you can, profit. It'll trail you 20 pips. So that's all. If you really want to read the rest of this, go ahead and read this. But that's pretty about it. But you can read this on babypips.com. Like I said, they're good to use, market orders and stuff. I hope that these videos help. These are the different types of Forex orders that you can use in the market. Like I said again, I've been trading for about 2 years. This is how I make my money. Okay, this is how I make my money. Okay, and how you can become rich in this. Okay, you can become very rich in this. It's a $66 trillion market. Okay, my mentor, he's already rich. Swag Academy, shout out to Swag Academy. Okay, you can find him on YouTube. Okay, so I started doing this about 2 years ago, and I'm finally starting to make money in this market. So this is how I make my money in this market. I make about 500. I can make about 500 every 2 to 3 days. Okay, so this is how I make my money. This is you can make 30,000 a month easily. You can, once you understand the information, you can make 10,000 a month, 20,000 a month on your just looking on your phone. Just looking at price and trading currencies against each other. Okay, so I just wanted y'all to know this is how I make my money, and whatever I can do to help y'all, make money in this market like I do, I'm going to continue to do that. All right. So it's your boy Nature, aka Nature.